Rising over the barriers. 200-day crossover surge. Here's the recent hurdlers jumping the 200-day moving average. A long-term line of defense has now become their launchpad. Companies like DGII, Ramp, RCMT, Live, and FTDR are charging through that barrier like sprinters clearing hurdles. Today's list shows 17 recent breakouts, with more than half coming from services, software, and real estate. Sectors that had been lurking in the background are now getting traction. Much like the athletes midair, this market is in a defining phase, the moment where lift meets risk. A misstep here could roll into a retest. The top 10 industry groups reveal strength building in computer software, regional banks, and REITs. Groups known to lead during rotation phases, especially when inflation fears cool and rate cut whispers gain steam. When these names cross above the 200-day and stay above, that's not just noise. That's money moving. And the leadership isn't just random. It's aligned with the market looking past the Fed's pause and gearing up for second-half surprises. But here's the kicker. Many of these are still down YTD. That's not bad news. That's setup news. It means this isn't the top. It's the beginning of the next leg. Verdict. The race is on. The crossover list is your scouting report. The industry chart is your roadmap. And the news cycle, that's the wind at your back, or the resistance. Boogie. I don't like any of the charts. I see the tariffs cooling off, and I see risk coming back on. That's what the makeup of these symbols is telling me. At the same time, the leading symbols are hitting resistance, which I see as tension building. Put the tariff talks in this, and there may be an explosion coming. The question is, which way? Mr. Logical. You're not wrong. The charts may not scream buy, but they do whisper rotation. What we're looking at is a reshuffling, not of who's strong now, but who might be next. These crossover names, they're early-stage risk-on plays, not momentum darlings, not leaders yet. That supports your read on risk appetite returning, especially if tariff pressure cools. The market wants a reason to run, but here's the logic. If the leaders are stalling at resistance while newcomers are crossing key levels, that's a tension build. Something's got to give. If tariff talks improve, expect a risk surge, possibly violent, as sidelined money floods into lagging sectors now flashing crossover strength. But if they break down, you'll see a trapdoor effect. Breakouts will fail, leaders will reverse, and the market will tip over with no safety net. Disclaimers, not investment advice. I may own, trade, or short any security mentioned. Trading involves risk of loss. All charts and metrics are produced in-house from public market data and current news. Full disclaimer, https://notesideasandthoughts.wordpress.com.